Good evening, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is August 1st, 2012. Lots to talk about. So let's get started. This is the daily chart of the SPY, which is the ETF that tracks the S&P 500. Let me load my drawings in here. Whoops. And let's do a quick analysis on what's going to happen. So I haven't been updating these videos simply because what I've talked about in the previous video is actually playing out perfectly, well, almost perfectly, where I said that I'll be taking a short if we hit this upper level here, and that's still a possibility. Right now what we're creating is this kind of a messy bullish consolidation pattern, and we could possibly move for another leg higher before coming down. Now I know I said in the previous videos this leg here I thought would be the leg down. However, we did not get a confirmation below this candle here, which indicated a possible reversal, and that's exactly what it did. In addition to that, we had higher volume in this candle. So now we have this upper move here and this bullish consolidation for another possible, and I would say possible push higher, because obviously nothing is 100% guaranteed. Not to mention the caveat, and the big caveat is tomorrow we have the ECB. Okay, so that's going to be a big one in my opinion. That's going to determine if we're going to break down, which would be a failed bullish pattern. And like I've been saying before, any failure of a pattern is usually a bigger move to the downside or inverse to the upside. Okay, so so if this pattern does play out and the ECB is good news, then we'll probably climb up to this upper level over here, in which case I will be taking a short. And again, if I close above here and confirm above the upper trend line here, after that taking the short, then I'll stop out and wait for this 142.70 level, which if you've been following my videos, if it does reach this 142.70 level, we should at least get an intraday pullback. I mean, these levels have been holding out. I'm probably going to be deleting these levels here. The only reason why I've kept them is because like I said in the previous video, if we do have a pullback, in which we did have a pullback, we may pull back down to this bottom trend line here before getting a bounce higher, which is what it is look like it's playing out right now, if that made any sense. I should rephrase that. It looks like that's in play now, where it's coming down and it's coming close to a close enough type of tag to this bottom trend line before we head higher, and that is due to the I'm assuming going to be the ECB. And now if the ECB is bad news, then I do expect a breakdown of this pattern. And once this pattern does break down, meaning this bullish pattern, this bullish consolidation pattern breaks down, then we should see a big down move to the downside. So right now I'm not in the market. I'm totally 100% in cash, simply because I don't know what direction it's going to go. And obviously I'm the kind of trader that puts his odds in his favor, and right now none of the odds are in my favor. It's not in my favor to the upside or in the downside. But the overall trend, I am still in a downtrend. I'm still not in a downtrend. I'm still bearish, and the trend is still down, and nothing's telling me otherwise. Let's take a quick look at the weekly. Alright, so this is the weekly chart, and what I've done was I've drawn this upper trend line here. We're pretty much almost into it already, but you see how this bearish flag is still in play. Okay, so keep in mind it's still in play, but if this bearish flag does fail, then we have a possibility again, right? The inverse, this is a bearish flag, and if the bear flag fails, then we should see a big move higher. So it really depends on which way it goes, above the trend line or on the bottom of the trend line. If I had to bet, and these charts aren't telling me it, but if I had to bet, or if I had a gun to my head, I would obviously pick the downside, simply because we're in a downtrend. Any uptrend trade, or any upside trade, or any long trade would be a counter trend trade, and that's obviously, if you've been watching my previous videos, I've proven time and time again that that's pretty much not a good idea to do that. Alright, this is a chart of the dollar. As we all know, the dollar up, market's down, and vice versa. Okay, I'm going to try and make this video actually 7 minutes, so I'm going to rush it a little bit. But we have this mathematically calculated line, which I think I'm going to have to do a recalculation, because I did the calculation at this candle over here. In any case, this calculated line has held up pretty well. We gapped above it, came down, we bounced right off of it, came down, gapped below it, came up, bounced off of it again, and then now we finally pierced through this mathematically $22.80 level. We went right into the 20 moving average and had a slight pullback. If the dollar continues higher, then I do expect the markets to continue lower. However, the dollar had this huge move, and the markets didn't move as much as you would expect in the dollar. But again, it's pretty much tick for tick, but it's not determined by price. But the opposite, dollar up, market down, is for tick and not for price for price. Now today's action was a little bit off. It wasn't exactly tick for tick, but I think it was more for people planning for the ECB news tomorrow. Okay. All right, this is the chart of the dollar futures. All right, so we bounced off of this. Well, we didn't bounce off. This actually created. This was the starting of this support line here. We broke through, came down, bounced off the support line here, came all the way down, and then we still are on this bottom trend line here. Remember, I told you guys in the previous videos, if we break down from this trend line here, then the dollar's coming all the way down to probably this level down here, or at least to this double bottom over here in this area here. And then in which case that'll give prop the markets higher. All right. Also, in addition to that, it's creating this bearish consolidation pattern for another move possibly down. Now, in previous videos, I did mention that I did have a level up here at 85.23, in which case I would take a short if the dollar, or I would go long on the markets if the dollar ever tagged this level over here, because it would be inverse to the markets, obviously. However, just keep in mind that we did break down from this bottom trend line here, right? We closed below this 50 moving average. Let me just zoom in a little bit if I can get this zoomed in here. We closed below this 50 moving average, but again, we did not confirm below the low of this candle here. In fact, we didn't even confirm this breakdown here, which even wasn't even considered a breakdown. It was, we still closed above this bottom trend line here. So this tells me that even though we did close below this bottom trend line over here, we did not confirm with another close down here. So that tells me that it wasn't a legitimate breakdown. It was pretty much institutional game playing. You have to remember, these trend lines are being drawn by everybody. You know what I mean? It's not like only I know about this trend line. So that's why I always use confirmation to determine if it's an institutional game playing or not. I mean, imagine all those other people who don't use confirmation took a short trade on the dollar here because they thought it was a breakdown from the bottom trend line, and right now they're getting hurt because the dollar's pulling higher. Okay, so just keep that in mind. Right now, the pattern, the charts are saying whether or not I believe it, and I don't, to be honest. I do think we could get a spike into this 85.23 level. However, the charts, and this is what you have to listen to, or what you have to look at, is the charts, and this is a bearish consolidation pattern here, but it's not a, how should I say, a strong one. And the reason why it's not I don't think it's a strong one is because this trend line is right here. This bottom support line is over here, and you're in between these two moving averages. So this bearish pattern here doesn't hold as much water as if it wasn't in this area of resistance and support, all in the same area. Okay, so this is your I'll try to keep you guys updated, give daily updates again. I know I said 2 to 3 videos a week. This would make the second video for this week, so hopefully I can make more and more videos. But I think for sure, I mean, I may not be able to do it every day, but for sure, if I think there's going to be a big change, just like tomorrow, I think there might be a big change. Tomorrow might be the day to make it or break it because of the ECB reports or whatever the case may be. I think tomorrow might be the big up or the big down day, and I'm just want to just give you guys an update because I think it will be a big day. I just don't know what it's going to be. So right now I'm staying in cash, and I'm going to wait for the signals on the chart to tell me when to take a short or long trade. Right now I am bearish, but if the charts are telling me to go bullish, then I gotta go bullish, and it's really not about my opinion, it's about what the charts are telling me. So thank you very much for stopping by and watching this video. God bless to you all. Good luck in your trading, and thank you very much again, and I will see you in the next video, hopefully.